Hey everyone and welcome. I'm Locke. You can think of me as your guide for this deep dive. Like that friend who can't get enough of those fascinating biographies.
And I'm Demosthenes, happy to be joining you.
Okay, are you ready for this? Buckle up, because we're diving deep into China's stock market.
Uh-oh. Sounds like trouble.
Well, let's just say it's been more dramatic than an episode of, a Chinese drama.
I can only imagine.
Seriously, both the mainland markets, A&D, the ones in Hong Kong, they've been on a roller coaster ride lately.
Yeah, it's been a wild ride for sure.
And even if you aren't directly invested in those markets, understanding this whole situation, it can give you a glimpse into what's happening with global economics.
Absolutely.
Politics, too, right?
Yeah.
And even social media trends, believe it or not.
Oh, definitely social media. I mean, what we're seeing is this perfect storm of factors driving the volatility.
Volatility, that's putting it mildly.
Yeah, well, we have policy shifts happening inside China. Then you have this sudden surge of interest from, get this, U.S. investment banks.
No kidding, U.S. banks.
Yep, and then on top of that, you have this unbelievable amount of hype on Chinese social media.
I've heard about that.
Especially on Douyin. Think of it as China's version of TikTok.
Oh, wow. So we're talking like monks opening trading accounts on TikTok.
Well, not quite TikTok, but you get the picture.
That's a wild image, though.
It is, it is. So where do we even start unpacking all of this market frenzy? What was the initial spark?
Yeah, I mean, where do we even begin to make sense of it all?
Well, a lot of the recent volatility, you can trace it back to this press conference.
A press conference.
Yeah, it was held by the State Council back on September 24th.
Oh, I think I remember hearing something about that.
Yeah, and it featured like some of the most powerful figures in China's financial world. I mean, we're talking Pan Gongsheng, Li Yinze, Wu Qing.
Okay, those are names I keep seeing pop up everywhere, so they're the key players in this whole drama.
Exactly. Those are the big players.
So it sounds like we're dealing with, I don't know, like a real-life House of Cards situation here.
You know, that's not far off. China's financial system, it thrives on these political connections.
That's all about who you know.
Yeah, and knowing the right people. And these three, they're at the very top. They're the right people.
Okay, so let's try to break down who's who in this high-stakes game.
Okay, sounds good.
First up, Pan Gongsheng. So tell us a bit about him.
All right, so Pan Gongsheng, he's the governor of the People's Bank of China.
So he's basically China's version of Jerome Powell.
That's a good way to put it. He heads their central bank, which is, very similar in structure to the Fed.
Interesting. Okay. So anything else about him that stands out?
Well, there's one thing. He was actually mentored by Zhu Rongji.
Zhu Rongji? That name rings a bell.
Yeah, he was a pioneer of China's financial reform, so Pan's got quite a pedigree.
So he's coming from like a reformist background. Interesting. Okay, let's move on to Wu Qi.
All right, Wu Qing. Now, he's the newly appointed chairman of the China Securities Regulatory Commission.
Oh, so that's the CSRC, right? Basically their equivalent of the SEC.
Exactly. And he's known for this, well, let's just say a very strict regulatory style.
Strict.
Yeah, I mean, he earned the nickname Butcher of Securities Firms back in 2005.
Butcher. Yikes. That's intimidating.
Yeah, he's a tough guy, that's for sure. And on top of all that, he has close ties to Premier Li Chang.
So even more connections to powerful people. Okay, last but not least, tell us about Li Yun's.
Okay, so Li Yun's, he's the head of the National Financial Regulatory Administration.
And FRA, right.
That's it. Think of it like a combo of the OCC, the CFPB, and then like state insurance departments all rolled into one.
Oh, wow. So this sounds like they have a lot of oversight power.
They do. I mean, they oversee banks, insurers, financial products, the whole shebang.
And they report directly to Xi Jinping.
That's right. So yeah, he's a pretty powerful figure.
So basically, he's the watchdog.
Pretty much. Making sure everyone plays by the rules, or at least tries to.
Right. Now, didn't you say that Li Yun's rise was connected to Xi Jinping's sister?
Well, that's what's rumored, yeah.
Right.
It's said that Qi Cao, Xi Jinping's sister, was his private banker.
That is interesting. So it really is all about those personal connections at the top.
Absolutely. You know, those kinds of relationships, they're rarely talked about publicly in China.
But they're crucial to understanding, like the motivations and the actions of those in power.
Right. It's all about reading between the lines and seeing those connections.
Okay, so we've got these three figures leading China's financial system, each with their own history and connections.
It's a complicated web for sure.
But what's the ultimate goal here? I mean, what is Xi Jinping hoping to achieve by putting these guys in these positions?
Well, a booming stock market, it's more than just numbers in China.
It's a symbol, right?
Yeah, it's a symbol of strength and stability, which is vital for Xi Jinping's image and control.
Right, especially now since China's economic growth, it's been slowing down.
Exactly. And local governments, they're facing financial challenges, so revitalizing that stock market.
It's a way to project confidence.
Exactly. Even if the underlying economic reality might be a bit different.
So it's a bit of a facade, a way to show the world that China's still on top, even if things aren't as rosy as they seem.
Yeah, you could say that. It's all about appearances, you know?
Okay, but here's what I don't get. U.S. investors, they've been so critical of China's market for years, calling it rigged, and now they're rushing to buy up Chinese assets.
I know, it's kind of strange, right?
It seems totally contradictory, so what's going on there?
Well, remember we talked about those connections? There's some serious money at stake.
Always follow the money.
Right. So Congress, they're considering legislation that could eliminate these capital gains tax exemptions.
Oh, yeah, I think I read about that.
And these exemptions, they apply to U.S. funds that are invested in China, and it's looking very likely that this legislation is going to pass next year.
So U.S. fund managers are trying to get ahead of this change
Exactly. They're trying to cash out while they still can.
before it's too late.
Exactly. And so that's creating this artificial demand for Chinese assets, regardless of the long-term risks.
It's like a fire sale.
It kind of is.
Yeah.
And all this foreign investment, it's helping to create this image of a booming market.
Which, of course, plays right into Xi Jinping's hands.
So absolutely, it all works out perfectly for him.
It's like everyone's playing their own game here, trying to maximize their gains in this whole market frenzy.
It is. It's a fascinating game for sure.
Okay, so speaking of playing the game, you mentioned earlier that Pan Gongsheng, he introduced this thing called the Securities Fund Insurance Company Swap Facility.
Oh, yeah.
What in the world is that?
Well, think of it as a really clever workaround, to inject money into the stock market.
Inject money without directly buying stocks.
Right, because Chinese law actually forbids the PBOC from doing that.
They can't just buy stocks outright.
Nope. So this is their way around that.
You
You could say that, but it's essentially a targeted form of quantitative easing, or QE, aimed specifically at boosting that stock market.
Targeted QE.
Hmm.
That sounds pretty unusual. I mean, isn't QE usually more of a broad measure to stimulate the whole economy?
You're right, it usually is. But that's what makes Pan's approach so intriguing. He's going about it a little differently.
So how does this swap facility work? I mean, how does it target the stock market specifically?
Well, it lets securities firms use, get this, bonds, ETFs, even stocks themselves, as collateral
Okay.
to get liquid assets from the central bank.
So it's like they're getting a loan, but using their stock market holdings as collateral.
Exactly. It's like a backdoor way to pump money into the market without technically breaking any rules.
That's pretty clever, I gotta admit. But it also raises another question.
Sure.
Shouldn't the CSRC and the NFRA be handling this kind of intervention?
You would think, right.
They're the ones who are focused on the stock market and financial regulation.
Exactly.
Yeah.
But this brings us back to those House of Cards dynamics.
Oh, right, those connections again.
Yeah, remember Li Yun's has Xi Jinping's backing, and Wu Qing's close to Premier Li Chang.
But Pan doesn't really have that same level of political clout.
Not really, no. In fact, there were rumors that he was almost passed over for the governorship.
Wow, so maybe he's trying to prove himself.
I think that's a good possibility, showing that he can get results, stabilize the market, even if it benefits Li and Wu more directly.
He needs to show his worth.
Exactly. It's all power play.
Okay, so we've got personal ambitions, political maneuvering, driving these big financial decisions. It's fascinating how it all ties together.
I know, right? It's like a chess game.
But what about the average Chinese citizen? How are they reacting to all of this market madness?
Well, let's not forget about social media. During China's National Day holiday, Douyin was flooded with these videos
Videos about what?
promoting stock investments, hyping up the market boom, buy now, get rich quick kind of stuff.
Oh, wow. And people are buying into it.
Some are, yeah. There are even stories of, get this, elderly men in Shanghai
Oh, boy.
proclaiming that they would punch Powell and kick Buffett.
Haha. Wow, they're serious.
They were so sure the market was going to skyrocket, they were ready to take on the world.
That's intense. It sounds like a modern-day tulip mania,
It kind of does.
fueled by nationalistic sentiment and that promise of getting rich quick.
Exactly. It's a potent combination.
But how much of this is genuine belief in the market? Versus just blind faith in the party's leadership.
That's the million-dollar question. And that's where this disconnect between perception and reality, it really becomes clear.
Okay, you've piqued my interest. What's the disconnect?
Well, you have the social media frenzy, the government's pushing this narrative, but then you look at the actual economic data, and it's telling a different story.
Hmm. So is this a genuine bull market, or is this all just a carefully manufactured bubble that's about to burst?
That's the big question, isn't it? And the answer is a bit more complicated than you might think.
Oh, come on. You can't leave us hanging like that. Spill the beans.
Well, you'll have to wait for part two.
Ugh, all right, fine. But you better have some answers for us then.
Don't worry, I will. We'll unravel the rest of this story and explore what it all means for you.
Good, because I'm dying to know what's really going on in China. Stay tuned, everyone.
It's almost like this, strange contradiction, you know.
Oh, tell me about it. It's like everyone got swept up in this whole idea that China's market, it's unstoppable.
Yeah, exactly. Like a runaway train.
But then you dig a little deeper,
Yeah.
right? And you see that the economic data, it's not exactly painting the same picture, you know? It's not as optimistic.
No, it's not. China's economy, it's facing some headwinds.
It's struggling, that's for sure.
And a lot of experts, they think the surge in the market, it's more about manipulation than genuine growth.
Oh, so you're saying it's a building this house of cards, you know?
Yeah.
Something that looks impressive but could collapse at any moment.
Yeah, that's a good way to put it. And that's why it's so important to understand, like, the motives of those key players, you know, Pan, Wu, and Li.
Right, because they're the ones pulling the strings.
They are, each one with their own agenda, working within this web of political connections and economic pressures.
It's a high-stakes game they're playing.
It is a very high-stakes game.
Okay, so let's go back to Peng Gongsheng for a sec. You mentioned that his approach to QE, that whole securities fund insurance company swap facility, it was unusual.
Oh, it's definitely unusual.
So can you explain why? Like, why is this approach so different?
Well, normally QE, it's like a broad measure, you know. It's used to stimulate the overall economy.
Right, by injecting money into the banking system.
Exactly. But you usually wouldn't use it to, like, specifically target one sector, like the stock market.
But that's exactly what Pan is doing.
He is. But remember, he needed to find a way to boost the market without directly buying stocks.
Right, because Chinese law forbids that.
Yeah, so he had to get creative.
So this swap facility, it's like a workaround, a way to pump money into the market through the back door.
That's a good way to think about it.
And lets him kind of walk this fine line, right?
Yeah, he's demonstrating he can stabilize the market, keep those higher-ups happy.
While also potentially benefiting Li and Wu.
Exactly, the ones who are closer to Xi Jinping.
It's like he's playing chess, always thinking a few moves ahead.
He's trying to anticipate everyone's moves, protect his own position. It's a power play.
So, okay, we see how this benefits Pan, but what about the average investor? You know, should they buy into all this hype, or is it too risky?
That's the question, isn't it? And there's no easy answer, but remember, markets are cyclical.
What goes up must come down.
Exactly. And in this case, the economic data, it doesn't really support all this optimism we're seeing.
So there's disconnect.
Yeah, between reality and perception. And that disconnect, it can be dangerous.
Because it creates a bubble. Right.
Yeah, and when those expectations don't match the fundamentals, well, that's when you have a potential for a correction or even a crash.
Okay, that's not very reassuring. So what are the warning signs investors should be looking for? Like, how do you know if things are about to go south?
Well, first, pay attention to the economic data coming out of China.
Right, the actual numbers.
Yeah, if growth keeps slowing down or if there are signs of, you know, financial instability, that could trigger a downturn.
Okay, so watch the data. What else?
Keep an eye on Pan, Wu, and Lai, you know.
Hmm.
Watch what they're doing.
Like, their actions might reveal something.
Yeah. If they start making moves that suggest they're losing confidence, that could be a bad sign.
Okay, like what kind of moves are we talking about? Give me some examples.
Well, for example, if Pan starts scaling back his QE program, that could be a sign.
Like he's trying to cool things down.
Exactly. Or if Wu King, remember the butcher, if he starts cracking down on market speculation,
That would send a strong message.
it would. So it's all about reading between the lines, you know, trying to anticipate their next move.
It's like they're all playing poker, trying to bluff each other.
That's a good analogy. And don't forget about social media.
Oh, right, doing.
Yeah. Keep an eye on what's trending. If the sentiment starts shifting, you know, from bullish to bearish,
That could be a warning sign.
it could, like the house of cards is about to fall.
Okay, so we've talked about the risks, the potential for a crash, but let's flip the script for a minute. Why are U.S. investors, the ones who've been criticizing China's market for years, why are they suddenly so eager to jump in?
It's a good question, and it has a lot of people scratching their heads.
Because it doesn't make sense.
Well, there are a few possible explanations. Remember those capital gains tax exemptions we talked about?
Yeah, the ones that might go away.
Right. That's a big motivator for U.S. fund managers.
They want to cash out before they lose that sweet tax break.
Exactly. So they're willing to overlook the risks, at least for now.
Short-term profit over long-term concerns.
Yep. But there's also this idea that, China might be too big to ignore.
Like they're a major player on the world stage no matter what.
Exactly. And some investors, they might be betting that China will overcome these challenges, come out even stronger.
So they're playing the long game.
They are hoping to reap the rewards down the line, even if it means taking on some risk now.
It's a gamble.
It is a big one.
But it also shows how complex China's story really is, right?
Oh, absolutely.
There's a country full of contradictions.
Capable of amazing growth, but also, a lot of uncertainty.
It's like they're building a house of cards, but at the same time laying the foundation for a skyscraper.
Uh-huh. Yeah, that's a great way to put it.
Yeah.
It's what makes this whole situation so captivating.
It really is. So speaking of captivating, I know our listeners have a ton of questions.
I bet they do.
We've got a lot of questions coming in during this discussion, so let's try to answer some of them.
All right, sounds good. Let's see what's on everyone's mind.
Okay, so let's get to some of these listener questions.
Yeah, let's dive in.
A lot of people seem really fascinated by, the role of social media in all of this.
Especially Douyin.
Yeah, Douyin. I mean, is it really driving investment decisions or is it more of a sideshow?
I think it's definitely more than just a sideshow. Social media in China, it's a powerful force. It's shaping perceptions, influencing how people invest. It's really something.
It's interesting because, here in the U.S., we think of social media as like entertainment, connecting with friends.
Right.
But in China, it seems like it has a much more direct impact on the economy. It's almost like a different beast altogether.
It is. And remember, China's media landscape, it's very different. The government has a lot of control over traditional media.
So people turn to social media for their news.
Exactly. Platforms like Douyin, they're where people go for news, information, even financial advice.
So you're saying people are getting their investment tips from, like, influencers and viral videos?
It happens, yeah. And it can be risky.
Oh, I bet. I mean, not all that information is accurate, right?
No, not at all. There's a lot of hype, a lot of misinformation out there.
It's like the Wild West of investing.
Yeah, you could say that.
So how can people separate the signal from the noise? How can you tell what's real and what's just hype?
It takes some healthy skepticism, some critical thinking, Don't believe everything you see online.
Do your own research.
Exactly. Consult with a reputable financial advisor.
Get some real advice.
Yeah. And remember, if something sounds too good to be true,
It probably is.
it probably is. That's a good rule of thumb for life in general, I think.
Yeah, I think you're right. Another question that's come up a lot is about, like, the long-term implications of all of this.
Oh, yeah, that's a big one.
I mean, what does this market volatility, the government's response, what does it tell us about where China's headed?
It's a tough question, but I think it highlights the challenges China's facing, Trying to balance that economic growth with political control.
Yeah, because they need to keep the economy growing to maintain stability.
Exactly. And project that image of strength to the world.
Right, but they also don't want to lose control to, those market forces.
It's a tricky situation. They're walking a tightrope.
And we're seeing that play out right now in the stock market.
We are. The government stepping in, propping up prices, trying to control the narrative.
Yeah, while also trying to prevent, too much speculation.
Exactly. It's a delicate balancing act.
With a lot at stake. So where does this all lead? What's the end game here?
Well, if I had a crystal ball, I'd tell you, but I don't, unfortunately. But I think we can expect more volatility in the Chinese market
More ups and downs.
as these forces play out, yeah. It's a dynamic situation.
So buckle up.
Yeah, it's going to be a bumpy ride.
Any final thoughts for our listeners? Yeah, as they try to make sense of all of this? It's complicated.
It is. I would say stay informed, stay vigilant, and don't be afraid to ask questions.
Question everything.
Exactly. The more you understand about, these dynamics in China's market, the better equipped you'll be to navigate it all.
Yeah, that's good advice. And remember, in China's house of cards, fortunes can change as quickly as the stock market itself.
Oh, that's for sure.
It's a market that demands attention, respect, and a healthy dose of caution.
Couldn't have said it better myself.
Well, on that note, I think we're going to wrap up this deep dive into China's market roller coaster.
Oh, roller coaster's the perfect word for it.
It really is. Thanks for joining us, everyone, and be sure to tune in next time for another fascinating exploration of, the forces shaping our world.
See you next time.